This is Valero Q3 2021 earnings call summary. For very well, I shouldn't say a long time. For the last year, they've had a loss on profit on net income for at least the last year, if not a bit longer. And finally, we're starting to see some profit come in. We've had profit now in Valero for the last 2 quarters, and so the price has really skyrocketed because of that, amongst some other things. Just a really quick overview. They made quite a bit of money on the refining, which is turning oil into gas, of course. They said that gasoline demand is somewhere in the neighborhood of 90% of what it was pre-pandemic. Of course, we have the holidays coming up. So what we're looking forward to is the reports on holiday travel. Now, the next earnings call is going to be January, toward the end of January. So I think that'll be a really good reporting period to kind of look back over the last 3 months, including November and December, to see what their holiday travel looks like in the U.S. and whether or not, in fact, people are getting in their cars, filling them up with gas, and then taking a trip to go see grandma for the holidays. The other thing that they spoke to was jet fuel. Jet fuel, they're saying, is something like 80%, 70% to 80% of what it was pre-pandemic. And so what this all means to me is that there's a lot of upside here, right? Now, they talk about the reason why they're seeing this profit right now is because not only do we have demand for the product, but supply is tight. Okay, there is we had Hurricane Ida on the South Coast, which is where Valero has a lot of their refineries, shut down production for a little while. And so because of that, there's not a lot of supply, and the demand is increasing, thereby the price is increasing. So the supply story has been everyone's story. Every earnings call I've gone through over the past couple months is all about supply. They spoke about diesel actually increasing in demand. Diesel has increased 10% more today than what it was pre-pandemic. But they're saying that there's still this supply constraint. They reported that truck companies are having a hard time finding drivers to actually drive the trucks to deliver the goods. Again, it's hard for me to see it. I haven't seen it for myself, so I can't speak to it. I can only read the reports and kind of go by that. But everyone is saying there's a labor shortage. Everyone is talking about this supply constraint. And I know during COVID, there was definitely a lot of supply constraint. I mean, everything from food to electronics. And so that's still the story. And that bodes well for a company like Valero. They're saying right now that the cost spread or the price spread from oil to gasoline is pretty wide, which means that they can purchase oil for a cheap price and then sell the gasoline at a higher price. The renewable diesel, as you can see here, lost money, but I do think it's a decent business to be in. Okay, just want to quickly show exactly what this renewable diesel is, and what they're doing is they're taking not only animal fats but used cooking oil from Mickey D's, and then corn oil, and then they're using it to create diesel fuel for trucks. Now, part of the reason why they lost money this year is because the price of corn has increased. And so when they're making their ethanol, when they're making their renewable diesel, they're having to pay more money for those goods in order to make the ethanol and to make the renewable diesel. But again, I think it's a decent business to be in. I did queue up another graphic here that I want to show off. Let's see if I can find it. Here we go. This is kind of where Valero is thinking things are going. Okay. The map over here on the left is the United States, and of course you have Europe over here. And these are all the places currently in Canada and the United States that have these low carbon mandates, right? And so what that means is that these states have passed laws that say that energy providers, as well as utility companies, have to reduce their emissions. And so things like renewable diesel, ethanol, and things of this nature is going to fall into these mandates that are coming down, and that's the reason why Valero is really going hard in this direction. The other thing I wanted to point out that I thought was really interesting, you see all these dark greens over here in the European Union, right? Outside of course, the UK, which is gone away from the Union, but the European Union as a whole has adopted these low carbon mandates. And so what Valero is doing to try and get ahead of that is they actually have a refinery over in the UK. Now, this refinery just is getting started. It's up and going, but you know it doesn't have any real time behind it. So they're still, you know, getting it together and making it work. They do not have a profit on it yet. But again, like I said, it's getting there. One of the things that they're really excited about from this refinery is going to be the heating oil as well as the natural gas, right? Because of course it's the European Union. So there's a lot of places there that rely on heating because it gets quite cold there, right? So they'll be able to benefit from the higher cost of natural gas, the higher cost of heating oils in those areas to make money there. Not only that, but from my understanding, they're also exporting their oil and their refined products from the U.S. to this refinery in the UK as well. The other thing I wanted to quickly touch on, because this is something that I've had a lot of fun with over the last month or so, is people complaining about gasoline prices. And I can tell you, I'm here in Ecuador right now, and there was an almost nationwide protest because the government who controls the gas prices sought to increase the gas prices. Now, I don't know if the protest worked. The gas did go up from $2.50 a gallon to $2.55, but they shut down like major highways in protest of the rising gas prices. People in the States have been complaining about the gas prices, and every time I'm just like, long Valero, you know, because when the gas prices increase, that bodes well for Valero. So it's a really nice arbitrage that allows you to make money when gas prices go up, and you take that money that you made in the stock market and use it to purchase, you know, more gas. So it doesn't really hurt you very much. But the interesting thing that I saw here now, the red line is the Valero stock price, okay? The black line is the oil futures, and then the blue line is the gasoline futures. Now, these are futures prices, so it's not dollar for dollar, but it does give us an idea of kind of where we were and where we are, all right? So this, of course, is the COVID drop, okay? And we see during the COVID drop, as you would expect, the actual commodity, right, the actual oil and the actual gas fell a lot harder than the company that produces and sells the commodity. That's one of the benefits of the stock market, okay? Now, with that being said, we see that in the past, Valero has outperformed the commodity pretty much almost every year going back the last 5 years. It is only recently that the Valero stock price has fell below the commodity price. And we see currently that the Valero is far below the commodity price. And what that says to me is that there's a lot of upside for Valero. I have not looked at the analyst target prices, so I don't know what the analysts are saying the price can go to. But I imagine that we're going to see a price somewhere in the neighborhood of $100 if this trend continues, especially if we start to really see travel open back up. I mean, like I said, jet fuel is only 70 to 80% of what it was pre-pandemic. And so if jet fuel catches up to what it was in 2019, then my goodness, man, Valero has a long way to go up. And so that's pretty much it. There's not a lot to talk about. There is quite a bit of cash on the books. They have something like $3.5 billion. They plan on using about $2 billion of that to, do things like, build out refineries and maintain them and repair them and all these things. They're also looking at reducing their debt. They just recently, and I think I mentioned this in a previous video, but they just recently closed out their notes, their bonds that were slated to mature in 2023. So what that means is that they are cash flush and they are looking at reducing their balance sheet so that those financial ratios are going to look a lot better. They're going to be a much leaner company. They're also not looking to acquire any companies at the moment either. The one thing that says to me is that you have a lot of cash, right? You're reducing your debt. So I'm assuming the dividend has got to move. They got to increase the dividend. They did talk about in stating more buybacks. And it was interesting in the call. I don't know if it was the CFO or the CEO, but he said that, you guys like us to do buybacks, but then when we do them and the price is high, you're upset with us. And so the question was asked whether or not they always link the dividend with buybacks, because right now they're spending about 40% of their income or cash rather in dividends. Okay, 40%, and that's not a lot. Okay, and so they want to get that number to 40 to 50%. And so the question is, okay, so the dividend is already a good dividend. I mean, I think the dividend is something like 5%. They always tout that as one of the highest in the market. And so the question is, are they going to then use the other 10% to do buybacks, or are they going to do a combination of the two? And what the gentleman said was that they do not link the dividend with buybacks. Those are two completely separate things that they think about. And, they don't, they don't automatically say, okay, well, if we're at 40% now, we're going to automatically make 10% buybacks, right? And so what that means to me is that we may see a dividend increase. Again, like I said, they said that the dividend is already in a good place, is already one of the highest in the market, in their industry. But why not? Why not increase the dividend? It's definitely something that as a stockholder, I'll vote for it, right? So that's it. Like I said, a lot of upside. Again, the big tail sign for me is the fact that as of right now, the stock is underperforming the commodity, and so that's got to catch up. We're looking forward to see what happens with holiday travel. All of the planes I've been on have been full, so like I said, everything that I'm hearing in these earnings calls, I'm just not quite seeing. The supply constraint when it comes to like I said, the food and electronics, Okay, yeah. But the labor shortage, finding drivers to drive the trucks, that's not making a lot of sense to me. But then again, it's not my industry, so I don't know. So anyway, that's it. Valero's doing really good. Look forward to to seeing this thing climb higher.